Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, President Trump heating up his trade war. Canada will now face a 35% tariff on all imports come August 1st, an increase from the current 25% tariff that's imposed on U.S. imports from Canada. Trump's announcement comes as he told NBC News on Thursday that he's also eyeing blanket tariffs on 50 to 20% when it comes to most trading partners. Plus, U.S. stock futures falling this morning after equities closed out at yet another record high. The S&P 500 index clocked its fifth record high in just 9 trading days. Meanwhile, Bitcoin's rally powers on, the token eyeing $120,000 after topping $118,000 per token as exuberance in the market persists. And Levi Strauss shares pushing higher after the jeans maker raised its revenue forecast, expecting sales growth to outweigh the effects of President Trump's tariffs. Analysts say the higher guidance might still be conservative. Let's get a quick check on stock futures. And as you can see, we are trading in the red here. The Dow futures were off almost 300 basis points. For S&P futures, we are down about 0.6%. NASDAQ lower about 0.5%. And this comes after we saw record highs for both the NASDAQ and the S&P 500. Now let's turn to our top stories of the day. President Trump announcing 35% tariffs on Canada and threatening higher blanket levies on other trading partners. The escalation sending stocks lower after the S&P and NASDAQ closed at fresh records. But that's not stopping Bitcoin, with the cryptocurrency hitting a new all-time high. Plus, Nvidia officially becoming the first company to close above the $4 trillion market cap threshold. Joining me now is Washington correspondent Ben Worschel, senior markets reporter Inez Ferre, and tech editor Dan Howley. And Ben, let's start with you here. We're seeing futures trade lower this morning, but all week we've been getting updates on the tariff and trade front, and markets have largely looked through a lot of that volatility and noise. But is something different about the threats on Canada, considering they are a close ally, a close trading partner, and obviously a neighbor?
Yeah, I mean, this is sort of in line with the week in the sense that there is an August 1st deadline on all of these things. But I do think you're seeing a bigger reaction to the Canada one. The other one I would flag as we're seeing a reaction to is Europe. Trump also promised last night around Europe that they would get a letter there today. Either whatever rate he dictates remains to be seen there, but that's also could be another kind of disappointing end to the week, a week that began sort of with hopes of a deal with Europe. Europe, of course, is the biggest trading partner. But as you mentioned at the top, Canada is the big one we're digesting today. And this was another surprise. This was another kind of upward revision from Trump of his Liberation Day 1.0 plans to kind of have this 35% duty on tariffs on Canada. There are a lot of unanswered questions about exactly what this 35% rate means. A big one is whether USMCA goods will continue to be exempt from it. There are indications that USMCA may continue to be exempt from this 35% rate, but there are mixed signals there. The Wall Street Journal has some reporting this morning that it could be exempt, but it's not final. Like everything else with Trump on trade this week, it's all kind of up for negotiation. There's a lot of other unanswered questions on this Canada deal for specific sectors. Oil and fertilizer is another sneaky big issue between the U.S. and Canada. So that how exactly those carve-outs fare if Trump follows through with that remains to be certain. One other quick headline to flag for folks on tariffs today is tariff revenue. We're expecting that we're going to get a formalization later today of June tariff revenue, which would be another record of big tariff revenue coming in from the U.S., well north of $25 billion. And that comes as Trump this week has really shifted. He started the week talking about a mix of deals and letters. It's all about kind of letters and tariff revenue, as he said earlier this week. The question being, well, of course, whether markets believe him, that the big money is going to come in on August 1st, starting on August 1st.
And Ben, that's a question I wanted to ask you, because when you talk to your sources in D.C., are they saying that you should take Trump at his word, or are they viewing it similar to markets, that this is a negotiation tactic?
I think it's a little closer to the market's view of a negotiation. The point I think that maybe is missed by the markets and definitely is taken by a lot of trade experts I speak with is that the taco trade is a real thing. This Trump always chickens out is real because he does back away. The issue is that Trump's pattern is to promise 5 things and then back away from 3, but then 2 remain. So there's still major changes in the trade landscape. I think folks are sort of skeptical that we're going to have a 35% rate on Canada, but it's going to be somewhat higher than it is now. So he's clearly kind of ending somewhere in the middle, which will still be a major change. So I think markets are discounting that these top line rates are what we're going to see, but I do think it's still going to be a raise on August 1st in some form, in some fashion, in kind of coming up to the last minute for certain.
Interesting. And Inez, even though futures are down this morning, we're seeing Bitcoin on the up and up. We're still trading around $118,000 a coin. What's fueling this rally?
Yeah, Allie, it's a series of catalysts that have been fueling this rally. I mean, you've had Bitcoin for a couple of months in a tight trading range around 10,000. So that trading range has been tight for this volatile asset, historically volatile, but really surging to all-time highs. You've got inflows going into ETFs, Bitcoin-backed ETFs. You've got corporate buying. You've got a strategy that continues to buy GameStop, all these companies that are putting Bitcoin on their balance sheet. And then you've got the regulatory framework that is friendly, that is from the Trump administration towards crypto in general. So year to date, you're seeing Bitcoin that's up 26%. You also have crypto-related stocks like Coinbase, the trading platform. You've got Robinhood. Those stocks have been at all-time highs, just absolutely on a tear this year. You also have the framework around stablecoin with the Genius Act. And then what we're watching is for the big catalyst next week that is going to be the crypto week in Congress, where they will be debating a series of bills, one of them being in the House, the Genius Act, which was passed recently in the Senate. So this has all been very positive for crypto. You've got also this uncertainty about the tariffs and where the fiscal situation in the US. So you also have investors flocking towards crypto, thinking, look, this may be a way to protect my wealth. So what analysts are looking at is now 120,000 for the resistance level. That is the one to watch.
120,000 here, and while Bitcoin is trading near those record highs, Dan, we also have a new milestone for Nvidia, closing above $4 trillion for the first time. In fact, the first publicly traded company to ever accomplish this milestone. Are earnings the next catalyst here? What are you looking out for?
Yeah, look, we saw obviously the reports and images of CEO Jensen Huang at the White House yesterday, and so that could be the next catalyst. Potentially, if there's some kind of new chip that they're able to ship to China. There's been talk, obviously, of them working with more of a high-powered desktop-style chip to turn it into an AI data center chip. Like those desktop chips are still incredibly powerful, so they would be able to do that. They just wouldn't have the kind of technologies that some of the data centers, the high-end ones, have for other countries. But yeah, earnings is going to be massive, right? This is going to be a part where we continue to see data center growth. We're going to see more, perhaps, of the sovereign AI growth. We just have to see when that starts to be reported. But that's something that Nvidia is really banking on, is the sovereign AI, and obviously Wall Street as well, looking at that and saying, look, this is another potential area for Nvidia to grow. There was that Saudi Arabia deal. They had their GTC in Paris, talking a lot about building out data centers in Europe. So obviously that's going to be a big part of that. And then, the idea that we've kind of taken the China equation out of revenue going forward for now, barring any kind of announcement between that meeting yesterday with Jensen Huang and President Trump. But the idea that China is no longer that overhang, save for a potentially $8 billion hit from products that they're not able to sell there that they were planning to, I think that could really boost Nvidia among investors' eyes going into the announcement of earnings.
And Ben, I want to kick it back to you because we're just seeing headlines crossing here on the specific goods that will be tariffed on Canada. What do we know?
Yeah, so we just got a little bit of an update. I just got a bit of an update from a White House official on exactly some of the parameters of this deal. So the expectation here is that we will see a 25% to 35% raise on the current goods that are tariffed at that would exclude USMCA, which are currently excluded and have much lower rate. It also would exclude the oil and the fertilizer, the potash that are kind of key sectors in watch here. So those, at the moment, are expected to be excluded from this 35% rate, but this official underlined to me, no final paper has been signed and no final decisions by the president have made. So it kind of underlines the overall point here that we're expecting this to only apply to this current 25% goods, but it's not final until August 1st.
Okay, and we're still seeing futures trade to the downside here, so we'll see if that changes. But guys, thank you so much. Appreciate it. Well, investors are still convinced the Federal Reserve will hold interest rates steady in its July meeting, but one Fed governor is voicing his support for rate cuts sooner. Yahoo Finance Fed correspondent Jennifer Schomburger has the details. And Jen, FOMC participants, they seem to have a lot of diverging views when it comes to when, if, at what capacity we will see these Fed rate cuts. So what's the latest here?
They sure do, Allie, and we've seen that on full display this week. Fed Governor Chris Waller reiterated Thursday afternoon that he thinks the Fed could consider cutting rates as soon as its next policy meeting later this month, because he doesn't think we're going to see any major impact from tariffs on inflation. He expects just a one-time increase in pricing as opposed to ongoing increases in pricing. Waller made the point that we're not seeing much tariff inflation right now, and that the Fed is closing in on its dual mandate goals. Maximum employment, which seems to be there, he says, and we're just half a percentage point above the Fed's 2% inflation target. Yet the Fed funds rate, which is the Fed's benchmark interest rate, stands at 150 basis points above where the rate should be if the Fed were closing in on its goals. Waller saying, quote, "I think we're just too tight. We could consider cutting the policy rate in July," adding, "It's not political." Meanwhile, San Francisco Fed President Mary Daly said she is not seeing evidence that inflation from tariffs is going to be persistent. In fact, she's coming around to the idea that we may not even see a one-time spike in pricing, because she thinks that companies are going to be able to manage the increase in costs all the way from the importer down to the retailer through the supply chain, so that when it comes to the consumer, any pass-through is going to be negligible. And Daly is looking still at 2 rate cuts this year, suggesting perhaps September could be the timeline for that. Now, the other Fed governor who has expressed that she could see cutting rates as soon as the next policy meeting later this month is Fed Governor Michelle Bowman. Of course, all of this coming as really the majority of the FOMC committee has been content to wait and see what the impact of tariffs will be on inflation through the summer months. The first test for that is going to come on Tuesday with the Consumer Price Index. Economists expect that prices are going to increase on a core basis, excluding those volatile food and energy prices, which is the way the Fed likes to look at inflation. They expect an increase of 2.9%. That would be up a tick from 2.8% in May. So we will be watching that data next week. Allie?
Fascinating to see all the different viewpoints here. Thank you so much. Now time for some of today's trending tickers. We're watching Boeing, AMC, and Performance Food. First up, Boeing investors are awaiting details from a preliminary report on an Air India flight that crashed last month. The Wall Street Journal is reporting that the initial investigation has focused on the pilot's actions and hasn't pointed to an issue with the Boeing 787 Dreamliner or the GE Vernova engine. On June 12th, the fully fueled Air India flight crashed just 30 seconds after takeoff, killing all but one of the passengers on board and dozens of people on the ground. Next, Wedbush turns bullish on AMC. Analyst Alicia Reese raised her rating on the stock to outperform, saying the movie theater chain is poised to benefit from more consistent releases over the next several quarters. But Reese stressed we do not see substantial growth in the movie theater industry over the next few years. AMC, of course, has faced headwinds in the first quarter from a weak box office entertainment. The 3-month period has historically been the company's quietest quarter. Finally, U.S. Foods is reportedly exploring an acquisition of Performance Food Group, according to a Bloomberg report. A potential deal between the two would create a company with total sales of $100 billion. U.S. Foods and Performance. These are the two of the largest food groups in the sector in North America. Their customers include restaurant chains, schools, hospitals, and convenience stores. A deal between the two would face antitrust backlash. In 2015, Sysco Corp's planned takeover of U.S. Foods was blocked by a federal judge. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. We see multiple analysts raise their year-end targets for the S&P 500 recently as concerns over President Trump's tariff policies recedes and bullishness returns on Wall Street. So you're taking a look at some of the top calls on Wall Street. We have Wells Fargo predicting that the S&P 500 will end over 7,000. BMO Capital Markets is at 6,700, and Goldman Sachs is now at 6,600. This is one of our most recent price target increases. So you can see how that's changed over the past several months. Of course, around the April tariff announcements, we had a lot of unknowns, a lot of uncertainties on Wall Street. But now we're becoming a little more bullish. Goldman Sachs analyst David Kostin, he noted the possibility for deeper Fed rate cuts, the fact that we're seeing Treasury yields edge lower as catalysts moving forward. He also said that traders will likely look past any near-term earnings weakness. We also saw a recent upgrade from Bank of America. They are now at 6,300. This is up from the prior 5,600. Now, Bank of America analyst Savita Subramanian, she's a little bit more bearish on the outlook. I mean, 6,300, it's pretty similar to what we're trading at right now. She sees earnings, especially in the tech sector, possibly deteriorating over time. However, she did say that you cannot count out corporate America. She says a lot of these large cap companies have been able to insulate themselves from various tariff unknowns here. And if we take a look at the S&P 500 since the start of the year, you'll see these April tariff lows. That's when equities dipped pretty aggressively. But there's been a steady climb up here, and we're now up around 7% year to date, again, trading around that 6,300 mark. Well, stocks are pulling back today as the trade wars escalate. President Trump announcing 35% tariffs on Canada and threatening higher levies across the board. Joining me now is Larry Tentrinelli, Blue Chip Daily Trend Report Chief Technical Strategist. So, Larry, we've seen several analysts raise their end of your targets for the S&P 500. I mean, are investors becoming a little too bullish at this point, especially with a lot of unknowns still out there in the market?
Good morning, Allie. I would say that the charts support that bullishness right now. We've broken out to new all-time highs in the S&P 500, also in the NASDAQ 100. We're over rising weekly moving averages, and we've got very good breadth. Sectors across the board are breaking out. It's not just tech. It's industrials, financials, communication services, very strong market trends.
And Larry, we have earnings, a strong start so far. Delta reinstating guidance, Levi's raising some of that guidance. Next week, we'll hear from the big banks. What are you hoping to hear from these companies that will support these equity moves?
We'd like to hear good guidance. Also, I'm curious to hear if there's any effect from tariffs, if they're seeing companies pull back, if we're seeing the consumer pull back. But the charts have run up into earnings, so the markets are baking in a good forecast.
But didn't we already have a pretty low bar heading into this earnings season? Does that mean it's easy for these companies to beat? And does that represent a false, sense of optimism in the markets?
It's never easy.
Okay.
And we never know what the market expectations are going to be because we have set the bar high right now. Because with all of these stocks breaking out with the strong uptrends, the expectations are very high. So it's really a wait and see approach right now. Okay,
so all relative. And when it comes to the Fed, various opinions out there on if, when, how many cuts we could possibly see this year. For you, when do you think the Fed is going to cut?
I'm in the wait and see camp. So I know it's a very debatable topic right now, but here's the backdrop. Inflation is still above forecast. It's been trending lower, but it still is above their 2% target. The labor market is very strong. And I think the Fed is going to continue to take a wait and see approach. Right now, there's a 30% odds of no rate cut at the September meeting. And I'm not predicting a Fed rate cut in September either. I think they're going to stay on the fence as long as they possibly can.
Do you think markets will sell off if we don't see that September rate cut, considering that's what they're pricing in right now?
It's possible that we get some volatility, maybe a standard 3 to 5% pullback, but I don't think it's anything that's going to derail the major uptrend.
What do you think is the biggest risk to this market? Higher for longer interest rates or just a bad earnings report from a company like Nvidia?
I'd say bad earnings because higher for longer is somewhat baked in because if we look at the bond market, they're saying 30% odds of no rate cut in September. And Powell's been very clear that they're going to be very patient. I think earnings is going to be the key driver. We don't want to see any major misses. We don't want to hear that companies are starting to pull back. We don't want to hear that consumers are starting to pull back. So earnings will be the key catalyst.
And given everything that we see on the horizon, from Fed to earnings, what sectors do you think are best positioned heading into the back half of the year?
So the big three right now: technology, industrials, and financials. Those are what I call the big three. They're tied to the economy. They're tied to the consumer. They also have very big weightings in the S&P 500. And what we're seeing is all three have been very, very strong, breaking out to new highs. Those are the top three that I'm watching.
Yeah, like you were saying, all three are currently trading at records there. What about specific companies within those sectors?
So in technology, we like stocks like Palantir, CrowdStrike. In the software space, semiconductors are very strong. Nvidia is breaking out, Taiwan Semi, Broadcom, and these are all major leaders. In the industrial sector, we like defense, stocks like GE Aerospace and Raytheon. And then in financials, the big banks and brokers, JP Morgan, Goldman Sachs, and also Robinhood's been very strong, new highs on the back of this crypto breakout.
Yeah, in crypto, we're seeing that trade at record highs right now.
Sure.
Palantir has been an interesting story to me because it's the best performing stock of the S&P 500, at least the first 6 months of the year. Can you consider it a meme stock still, or have we moved beyond that?
No, Palantir's real. They've got real sales. They've got real earnings. They've got major contracts with the U.S. government. So when I think of meme stocks, I think of AMC, GameStop, things like that, maybe stocks that don't have a lot of good fundamentals. But Palantir is in a very sweet spot, high earnings growth, 39%, high revenue growth, and they've got a real business model.
All right, well, Larry, thank you so much, and you'll be back on Opening Bid in just a few short minutes.
Great, thank you.
And coming up on Yahoo Finance, we do have Opening Bid. Our own executive editor, Brian Sazadi, joins us now. So, Brian, what's coming up on the show here?
Allie, happy Friday. We're going to dig into all things tariff man and how the market continues to completely ignore everything that it's reading on tariffs, and it has been a very busy week on all things tariffs. We're also going to talk about earnings. It has also been a fascinating start, at least my humble view, on all things earnings. Big blowout quarter from the likes of a Delta with strong guidance. Levi's out here last night. Good earnings call from them. And then we have our stock of the week. Allie, I'm not going to tell you what it is. I'm going to, what they say in this business, deep tease it.
All right, deep tease. I'm excited to see what it is. That does it, though, for Morning Brief. Much more ahead on Yahoo Finance.